Every day's a holiday when we get these two guys together, here to go toe-to-toe for Traders Unplugged. From CME Group, Alan Eckman and Scott Shellady are on deck. Thanks for joining us, guys. Topic number one, second quarter celebration. What should investors expect from second quarter earnings?
Well, you know me, I'm always optimistic. I think this quarter the numbers could really come in. I'm looking at the financials. Show me the money, as I often say here. XLF has a target 15% higher. The banks are still down over the last 5 years compared to the rest of the market. They got a lot of catch up.
Well, I think that most investors, myself included, having seen the first quarter GDP print what it's been printing, we can't blame it on the bad weather anymore. I'd love to see some growth in top line revenue, not just bottom line. So I want to see the companies report good top line revenue growth, because I don't think they're going to. We can only cut ourselves so thin. We can cut the last salesman. Once you cut that last salesman, you don't make another sale.
You can only lay off so many more people, right?
Top line revenues need to start growing, or we're in trouble. I think we're already in trouble.
Topic number two, buyout blitz. The takeover trend has accelerated after a strong stock market run. Good sign or bad?
I don't know, Alan, this is your question again. I think it should be, we should be really, really happy all this stuff's happening and the market's doing well, because we're seeing a lot of M&A. And
is that a positive sign for the market? Yes,
it's not. It's nothing for the market.
It's not good for the consumer. Look at my DirecTV. Do I want AT&T involved in my DirecTV?
No. So those guys buy a new company, or they merge with a company, they fire people.
Exactly.
Oh my God, Alan, the little guys.
I agree with you. I agree with you. The airlines now, there's only 4 airlines that fly, and guess what? I'm gonna have to pay whatever they charge.
And bring your McDonald's on and make everybody smell what you're eating.
But as far as the stocks go, this gives them pricing power, and they can gouge the consumer. They're going to make more money. Stocks will continue to do fine, and we suffer. Both of us.
It's not a sign of anything.
Both of us.
It's not a sign of anything good.
Topic number three, cash out. Retail investors are keeping more assets in cash compared to years past. What's the best place for a cash stash?
Yeah, that to me is a bad sign. I don't think the consumer is, the retail trader is often right. So, you know, I don't know about that. Cash, is that a position we want to be in right now? There's so many other opportunities, and you're not getting any yield.
You have to have a little swagger when it comes to that cash. So I would say silver, wine, art, gold, energy, and real estate. The swagger.
Obviously, you travel in different circles than I do. Art and gold, those are just your places you put your chips?
Well, those are places that you can put that cash in.
What kind of art?
What kind of art?
Impressionism?
Well, you know, then that's on the next show. Alan will explain Impressionist artists. So if he can name 2, we'd be happy.
In your bonus round question, there's a long-standing grudge match between Chevy Camaro and Ford Mustang. For the first 5 months of the year, which car took the lead in sales?
I'm a Ford guy.
Well, I have to go the other way just because he said Ford.
The answer is Chevy Camaro. I owned one.
Again.
All right. Good job.
You guys talk.
First Business continues right after this.